I think after the pandemic, investors need to pay attention to policy shifts, and in particular, what expectations for policy, for new policies, should be considered, things that probably didn't happen before the pandemic. For example, in the US, checks have been sent directly to households, and we saw during a political campaign that those checks immediately became something that politicians could use to lobby for votes. But the checks were also very effective in driving consumer spending straight away. But I think in future recessions, the public is going to demand them straight away, and not just in the US. Policy shifts on monetary policy are interesting as well. And in the future, I wonder about whether higher interest rates than what are priced in the market now will be something that gets pursued, that surprises the market. But if rates have to stay low, we've again seen central banks go into credit easing measures, buying bonds directly, doing all sorts of other things. In the short term, a lot of economies are going to see rising inflation because year-on-year measures are going to be pushed up as the terrible spring of 2020 fall out of those measures. We also have some upward pressure on inflation around the world due to supply side issues, semiconductor shortage, rising commodity prices, and some issues in shipping. I think later on, as the recovery picks up, we may see price pressures in services industries. Maybe it's hard to bring all the restaurant workers back as quickly as demand recovers. But all of these central bankers will see as temporary inflation shocks. There are long-term questions about inflation too, given the expansion in central bank balance sheets, the strong stimulus in some countries, especially the US, the likely return to full employment. Could you have inflation a little later? Maybe policy is a little bit too easy. That's a very different question from the short run question, but that's something that markets are focusing on as well, sometimes conflating the short-term issues with the long-term issues. I think the inflation question is a little bit more intense in the US compared with other developed market countries, because the US is really fast out of the gate in terms of vaccinations, and also has used fiscal stimulus much more aggressively than other developed economies. In places like Japan and Europe, the inflation outlook continues to be relatively muted, and in emerging markets, the inflation outlook really varies significantly from country to country. As we exit from the pandemic, we will continue to monitor all sorts of data on social distancing, foot traffic, web traffic, mobility data has been critical during the pandemic. Also distributional data. Maybe some parts of the household sector in a given country are doing quite well in terms of cash flows and balance sheets, and others are not. So I think investors should continue to watch distributional data. I think in terms of pandemic rebound, that foot traffic type mobility data will be important. And more broadly, I think there's an understanding of some of the limits of productivity, inflation, and real GDP measures. I'll probably keep a better eye on nominal GDP measures going forward, especially given the inflation uncertainties, and also labor market data, which I think tend to be a little more reliable as well.